It is Friday, May 8th, 2026, and once again we have another basically nothing burger day, but it was still very volatile. It was kind of just chopping around, not doing anything pre-market, and then the market opens. We just get this complete dumpster fire going on here, down over 3% for my account, and then it just completely reverses all losses to be completely flat for the day. So it still feels like my account is consolidating while the rest of the market seems to be making all-time highs, or at least the major indices, and some select stocks and sectors like semis, for example. AMD has been ripping like crazy, but still the past month I am up over 5%. 3 months I'm still down 14.27%. Unfortunately, I was I was a little bit green last month, but year to date I am now down 31.87%. Man, I should have bought some AMD. Year over year, I am still up 31.69%, and of all time, of course, 361%. So, like I said, I think my account is just consolidating. The stocks that I hold. Unfortunately, I didn't time the cycle perfectly. I didn't take a whole lot of profit out of my fintechs when we had that big surge, and then dump it into semis and AI related type of stocks. But now that we've completely crashed in the sectors that I like to invest in, I think this period of consolidation is a lead up to what could potentially be another uptrend, a bull cycle for fintech, crypto, etc. The type of companies that I like to buy. But we have crypto that is doing very well recently. Solana is the standout, up over 6% today. And the past week, it has gone up 11.64%. Past 3 months, it is now 6.7%. Still down year over year, but it does seem like crypto is catching a bid here, and potentially some money is rotating out of those big winners and into the sectors that have been beaten down. If we take a look at IGV, another example, it did tank quite a bit at open, and then completely reversed its losses. For the past week, it is up 6.83%. Month, it is up 18%. Still down year to date, but to get to break even, that would be $106.50, which is basically what I'm looking for. Once it gets over 100, I will probably sell a covered call and just keep collecting premiums. Maybe it'll get called away, whatever. I'll keep my 10 shares, probably dump it in my secondary account. If we take a look at some of my recent transactions, I did go ahead and buy another share of MELI, which we will get to. Some expos that I saw that I thought were interesting. I got my American Express dividend, of course, redeemed some cash back. But I also did withdraw a little bit more money, which has been a bad habit lately. But I do have $204 coming from REPX and another $23 coming from Hess midstream. Now, the first post that I want to talk about was this one that I saw from CNBC that I did end up reacting to with Michael Burry saying that this feels like the last months of the 1999-2000 bubble, which is basically the tech bubble, right? And this post is basically my reaction and my opinion of the statement. Like, yes, the market is at all-time highs, right? Yes, there are some sectors that are just exploding like crazy right now. But we also have the sectors that I've been talking about for a long time, like software, fintech, crypto, just getting obliterated. So you can't really say that this is a bubble when we have tons of stocks trading at very fair valuations that most would agree on. A lot of these stocks like Robinhood, and Robinhood didn't report mind-blowing numbers, but you can't say that their numbers are bad, right? But still, the stock goes down like 10%, something like that, on earnings. Nike, it has been a little bit rough for them lately, but you can't say that stock is in a bubble. MELI reported great numbers, but for some reason the stock is down double digits. Same thing with SoFi. SoFi is just copying Robinhood. IGV. it's a little bit better right now, but it's basically in a bear market. Crypto and software are in a bear market right now, and you can't forget Shopify. Shopify also had decent numbers, and it just got obliterated on earnings. So you can't really say that this is the tech bubble 2.0. I think even some of big tech is down, right? Correct me if I'm wrong, but Meta is also down. So I disagree a little bit with Mr. Burry. And speaking of Mercado Libre, they reported amazing numbers. And for those of you that don't yet already know, Mercado Libre is the only company in the world that can say that they have 20% plus revenue growth for 30 consecutive quarters. The only company in the world that is able to say that, according to Fiscal AI here. And another post here that is a little bit similar to what I showed you guys in my previous video when Shopify reported numbers. MELI just reported their highest GMV growth in 4 years, which is basically what Shopify has also been seeing. But for some reason, these two stocks are just getting sold off with the rest of fintech. Everything else is going on with software, crypto. Everything is just getting lumped in together. So most likely I will be eyeing some more MELI and Shopify here. Now I do already have a cash care put that is in the money right now. So it is at a loss on paper right now. I haven't realized that loss because the trade is still open, but potentially could get assigned on 100 shares of Shopify this year. And I might take some of those premiums and funnel it into MELI. I was also thinking, Robinhood and SoFi, but I already have positions in those two stocks, and Robinhood being my number one position. And SoFi is a small position, but I don't think I want that to be as big as Robinhood. Now, of course, we have some very interesting earnings that are going to happen next week. Circle reports at Monday open. And I thought about playing Circle, but at the same time, I don't really know what the reaction is going to be. Most likely everybody probably is already thinking what I'm thinking, which is the rest of fintech has been crashing on earnings, so why not Circle? And that is true. But at the same time, just because it might actually go up just because everybody is thinking that it's going to go down. But it is what it is. I don't think Circle is a bad stock. I just think my focus is on a lot of other stocks like Shopify, MELI, for example. But who knows? If Circle does crash on Monday, most likely I'll be taking a deeper look into it. HIMS is also reporting on Monday. I know a lot of you guys might be holding that. A lot of like retail type of stocks here. I've heard of Oklo, that name get tossed around a lot, but nothing really piques my interest other than Circle so far. Wix is interesting because it's been beaten down a lot. It's one of those getting lumped in with the rest of software type of companies. But they've been buying back stock heavily, I heard. NetNBIS is another like retail favorite I've heard a lot of. But honestly, I'm kind of interested in Klarna, but obviously Nubank is going to be one that I keep my eye on. And a lot of other interesting stocks like Rumble, Alaska Airlines, and whatnot. But basically, my focus is on fintech, maybe a little bit of software. Figma is also one that has been getting sold off like crazy with the rest of IGV. But mainly Nubank, Circle, Klarna are the ones that catch my eye just because I'm a fintech guy. But yeah, there's a lot of like retail favorites here. And right now, Mercado Libre, I only have 1.11 shares. And now the 0.11 was actually is actually just pure profit. It was my previous trade that I made on MELI. It went up to like I want to say 18 something. As you guys can see here, I did buy it at 16.57 and then I sold it at 18.72. Took out my principal, just keeping my fractional shares, and now I am rebuying at 16.68. And hopefully it stays at these levels for a little bit of time so I can generate some more option premiums and buy up MELI. But I do think this is going to be the year where fintech, software, crypto, it kind of accumulates. We've been going through this winter bear market, and potentially we could see a big bull market coming out of this.